Hey there, welcome to the video. Today, I'm going to be talking about investment accounts. If you've been following my videos up until now, you'll know that I've talked a lot about basic investment strategy and common terminology. But the question remains, what does all that look like? And how would you get started? This is going to be part one of a 3-video series, since with investment accounts, I can really get into the weeds of all the different types and the specifics for each one. So this will serve not only as an introduction to what investment accounts are, but also serve as a basis for the videos to come. So if you're learning all this for the first time, then really tune in, because investment accounts, like bank accounts, are fundamental things in life not taught about enough that you really need to know. Welcome to Finance for Everyday People. I'm Jeff Moore, where I teach you all about your personal finances like you should have been taught. Now, I'm actually going to start off with the comparison to bank accounts, since I'm sure most people are already familiar with that. With bank accounts, all it is walking into a bank, opening up an account, deposit money into said account, and then from there you can store and manage your money. Investment accounts work the same way, just with the additional step of once that money is deposited into the account, its primary purpose is to then trade for investments, things like stocks and ETFs. Those investments you buy are then stored within the account, same with the cash. The act of buying and selling investments is called trading, and the accounts in which they take place are called investment accounts. Now with banks, you have the option of either opening a checking account or a savings account. A checking account for day-to-day finances and a savings account for long-term goals and emergencies. Both are banking accounts, just two different types. Similarly, investment accounts have several types, each with their own unique purpose and specific rules. For banks, you have big companies like Chase, Wells Fargo, Citi, all places you can open up your bank accounts. For investing, you have big companies like Charles Schwab, Fidelity, Vanguard, and just like each one of these banks offers checking and savings accounts, each one of these brokerage firms offers different types of investing accounts. And brokerage firms are just what we call those companies that allow you to open up investment accounts. Now, before I start diving into the different types, I first want to make sure we understand the whole picture. You can have one person who deposits their whole paycheck into a bank account, like a savings account with Chase, and that's that. You could also have a second person who, in a similar matter, has a lot of their money deposited into a bank account, but some of their money also goes into an investment account. Let's say a brokerage account with Fidelity. I have direct deposit set up with my day job so that I can have money funneling straight into my brokerage account with Fidelity. So it really is treated just like a bank account. Again, the primary purpose of investment accounts is to conduct trading, but it still holds money in it. And this is a common mistake most people do when they first open up an investment account. Just because you deposited money into the account doesn't mean you're investing. You need to actually go in and start buying the stocks, ETFs, and other investment types to actually get started. Another thing is, with today's modern age, you don't physically need to show up to Vanguard and open up a brokerage account. Just like with banks, you can go online, sign up, and open up an account that way. Now that we've covered what it means to actually have an investment account, let's talk about the different types of what you could have. And I'm going to break this down into 5 different categories. We have taxable accounts, retirement accounts, accounts for your health and medical spending, accounts meant for education, and custodial accounts. For the rest of the video, I'm just going to be talking about taxable accounts, and the other 4 will be part of the next 2 videos. So let's talk about taxable brokerage accounts. Now, even though you can open up other investment account types at brokerage firms, typically when someone says brokerage accounts, they're referring to this one. It's pretty much everything I've talked about so far when it comes to investing accounts. It's just a way to hold money that you then use to buy and sell investments. And this is your everyday, most flexible account when it comes to investing. And when you do withdraw money from it, it could be for anything you would like. Doesn't have to be for retirement, doesn't have to be for any medical spending. It's for whatever you choose. The caveat is taxes. Just like with property taxes or income taxes, Uncle Sam always gets his slice of the pie. We call that capital gains tax, but not only are you taxed on the gains, but also on any interest and dividends. I'm going to make a whole video on taxes alone because there's so much to talk about with that one topic, so be on the lookout for that one. I'll stop here so that you can have a second to digest all this information, again, if you're completely new to it. But please, if you have any questions, leave it in the comment section. I'll be sure to get to it as soon as I can. I hope you've enjoyed the content so far, because this topic alone really builds your financial literacy to a level that most people just aren't at. This topic isn't talked about enough in schools or when you're growing up, and knowing all this opens up so many doors for you to recognize opportunities to better your finances. So please, if you've enjoyed, drop a like, subscribe, and share with a friend who needs to hear it. Be on the lookout for the next two videos, because I promise the information on those, you'll want to hear it. See you next time.